Drama, scandal, and all sorts of shenanigans. If you've been following the crypto scene for a few years, you start to get used to it. Not a week has gone by in recent months without a centralized platform crumbling, regulators stepping in, or a major hack on the DeFi protocol. But what happened this week is a fresh twist, something different, something straight out of a crypto-tinged Black Mirror episode. It all kicked off on July 10th when ARKHAM Intelligence, an on-chain analytics company, announced the launch of a brand new exchange. Now, we see a new exchange projects popping up every day, but that doesn't mean we'd make a GA crypto video about it. But here, the issue is the very nature of what's being traded. We're not talking about swapping one asset for another in some revolutionary way. No. Here, the hot topic is information, exchanging information, and not just any information. Details about the owner of any crypto address, all anonymously via a smart contract. That's all it took to set Twitter ablaze, with folks dubbing the project Dox to Earn, and boy, is it apt. For those who may not know, doxing is a practice of exposing sensitive and private information online. Like when the host's identity and picture from the Think View show leaked online, it was said that Sky got doxed. But let's circle back to ARKHAM Intelligence and their new platform. What's the real scoop? Is it a flash in the pan, an opportunity, or a genuine threat? We'll break it all down in this video. Originally, ARKHAM Intelligence is a company founded by Miguel Morel with a mission to make on-chain analysis accessible to all. I'm going to take a couple minutes to clarify what on-chain analysis actually involves. As you likely know, public and open blockchains like Bitcoin or Ethereum are distributed ledgers capable of storing all sorts of data in a decentralized and secure manner. These ledgers hold the history of all past transactions conducted on that network, along with their metadata. For instance, the Bitcoin blockchain contains all transactions carried out on the Bitcoin network since the very first block was mined on January 3rd, 2009. This ledger lets us know who owns the 19.43 million circulating units. Well, not exactly, because the ledger doesn't disclose identities, only addresses. Keep this in mind as we go on. In the case of Bitcoin, we could liken this ledger to a massive Excel file of about 400 gigabytes maintained by all nodes on the network, listing the balances of all Bitcoin holders around the world. This transparency and accessibility to data open up a world of possibilities. Anyone with the technical capability can now, by observing and analyzing movements on a network's blockchain, attempt to gauge market sentiment and behavior. This is what we call on-chain analysis. ARKHAM Intelligence was and still is capable of performing different types of on-chain analyses with a very sophisticated product set that allows you to make different queries to analyze a crypto address or token, for example. In fact, it was this company that raised the red flag and pointed out a withdrawal of more than 428,000 staked Ether from Lido, originating from Celsius following its collapse. And it was also ARKHAM Intelligence that investigated the hack that FTX suffered following its bankruptcy. So up until this point, ARKHAM's work seemed quite interesting and beneficial to the community. But things took a very different turn a few days ago when the company announced the launch of an on-chain intelligence exchange, a marketplace that simply allows the exchange and sale of information. On paper, the product meets a significant demand for on-chain analysis from various stakeholders, such as traders, protocols, journalists, but also governments. The tool aims to bring more transparency to the blockchain while rewarding those who provide information. The pitch is crystal clear on their homepage, de-anonymizing the blockchain. So how does this on-chain intelligence exchange work exactly? In practice, you'll have users seeking information about a specific crypto address. Something like this. They'll go to the exchange platform to submit their request, along with a proposed payment. Then, bounty hunters can provide information about this address in exchange for the reward. Sounds a bit like the Wild West, doesn't it? The system will also work in reverse. A user with information about a wallet, for example, can offer this information for sale on the marketplace. When a user purchases information, it's reserved for them for 90 days before it becomes available to all users. ARKHAM also has a token, the ARKHAM, which will be staked. In other words, locked up as in a bounty. The first user to submit the sought-after information will be rewarded with the staked token. And if you're wondering how ARKHAM makes money in the midst of this information sale marketplace, it's quite simple. They take fees on sales and purchases. Added to this is an entire system of fee discounts based on the number of tokens staked by the users. The obvious goal is to lock up as many ARKHAM tokens on the platform as possible, so they can't be sold on the market. Even though this could allow a bunch of budding on-chain detectives to get noticed and monetize their skills, the launch of this new platform nevertheless raises concerns about potential abuses it could lead to. Users are now financially incentivized to provide information about the holders of an address. Literally, people will be paid to dox users. Sure, for hunting down scammers, why not? But first, did we really need this type of tool to spot frauders? And second, is the game worth the candle? Because we can easily see how things could go wrong. Ask yourself, who has the most information on crypto users? That's right, centralized exchanges. Even for users holding their assets in self-custody, on a Ledger or Trezor wallet, for example, it's not uncommon to go through an exchange for on-off ramping. Yes, there are alternatives like MT Pellerin, for example, which allows you to acquire crypto up to a certain amount without any KYC. But let's be honest, 99% of crypto today is tainted. This means that if you go back far enough in your TX history, at some point, we'll be able to reconstruct your entire portfolio and link it to your identity. If you can sell information about a user like you can sell any shitcoin on-chain, all while remaining anonymous, is it possible that an employee of an exchange might be tempted to sell a client's information for a handful of dollars on ARKHAM's marketplace? Well, you might be thinking we're taking a rather dark view of things, that we're envisioning the worst. And then, after all, if you have nothing to hide, you're not interesting to anyone, so no problem, right? Yes and no. Look what happened to Hasher just over a year ago, when a madman came up with a gun to steal his crypto. Blockchain transparency without pseudonymity becomes a nightmare. It's as if everyone could check their neighbor's bank account balances. Now, if we look a little more closely at who's behind the investors funding the project, we find some rather interesting personalities. First, we find OpenAI, which, as you know, is behind ChatGPT, but also and above all, behind WorldCoin. You know, the famous project that offers to scan your retina in exchange for a few tokens? We told you about it in this video. And to complete the list of investors backing ARKHAM, we also find the company Palantir, co-founded by Peter Thiel, Elon Musk's former associate at PayPal. Palantir is a big data company listed on the US stock exchange, valued today at over $35 billion, developing software specialized in data analysis. The company is relatively close to certain American institutions, including the CIA. When questioned on this point, ARKHAM explained that they're not affiliated with any government agencies. They also indicated that the community had misunderstood the project's intentions and that they're focusing on wallet movements, not personal information. As the crypto community was outraged at the launch of the marketplace, the giants of the ecosystem, mainly Binance, announced on their side that the project's token would be integrated into the next launchpad, currently underway on the exchange. Business is business. It's quite amusing, not to say something else, to see exchanges that rush to delist 100% anonymous crypto to promote the rise of this type of diametrically opposed alternative. Now, as a user, what solutions do you have to maintain a minimum of privacy on your transactions and on your assets? Well, unfortunately, not much for now. The way Ethereum addresses work, for example, means that with your public key, you can access the details of your balance and all your operations since the creation of this address, and all without too much effort. So yes, you can tinker by using bridges or by going through a centralized exchange to then switch to another address, but not sure that in the end, it's very effective. There are also solutions like Tornado Cash, which we talked about during all the controversy over mixers. But unfortunately, at present, as soon as you use this kind of tool, you're banned from almost all exchange platforms. You may think we're exaggerating, but this is indeed the reality. Some personalities in the ecosystem, like Mark Zeller, for example, have paid the price and are denied access to certain services if they have interacted directly or indirectly with Tornado Cash's contracts. Another solution could be to use layer 2s on Ethereum, like Aztec, for instance. This aims to ensure transaction privacy on the network. But you can't ignore the regulatory risk hanging over these solutions either. In fact, the censorship connected to Aztec has already been shown. For example, FTX blocked a user's address who had interacted with the ZK Money protocol, a DeFi protocol built on Aztec. Of course, for those passionate about privacy, there will always be solutions that, when used correctly, offer a high level of confidentiality. Monero and Zcash are prime examples. But as we saw earlier with Binance, these cryptocurrencies are gradually being delisted from trading platforms. Well, not everything is lost. There is still a glimmer of hope to maintain a hint of privacy on Ethereum and its ecosystem. For instance, Vitalik stirred up some thought-provoking discussion in early June with a post on his blog, The Three Transitions. In this post, Vitalik believes that Ethereum has matured enough and that the network is now ready for 3 major transitions. He brings up scaling with layer 2 solutions, innovations in wallets with the use of account abstraction, something we talked about in this video, and finally, he discusses the challenges and needs for privacy protection on the network. Over on the Bitcoin side, it's the same story. Many developers are actively working on ways to make on-chain analysis heuristics obsolete and ensure that Bitcoin users can continue to transact privately and securely. It's a game of cat and mouse.